Chief Commercial Officer at Movement Mortgage. We have Tracy Hunter, Managing Director, Production Business Technology at PennyMac Loan Services. We have Brian View, President and Chief Operating Officer at FinLocker. And we have Jay Nair, who's the Industry Head, Senior Vice President for Financial Services at Infosys. So let me kick it off with a few sort of data points and metrics on where the industry is. The Mortgage Bankers Association just came out with their forecast. The three takeaways that I could see from them was that the interest rates are going to rise to around 4% next year. The volumes has a very interesting story. The purchase volumes will hit an all-time high, and the refinance volume are going to drop significantly. In fact, there's a 60% drop in refinance volumes next year. So it will be an interesting, sort of shift in the market from purchase to refinance. And the third takeaway from the MBA's forecast is the housing price appreciation is going to moderate. It's not going to be as crazy as it was this year, but it will also not be negative. So there's going to be stability, and they are forecasting a 5%, house price appreciation, 2022 and 2023. The other metrics which is going to shape the industry is around demographics. Today, Gen Z, millennials, Gen X account for 63% of the houses that were bought according to NAR this year. And that percentage is just going to keep increasing as we move forward and as more and more home buyers are of, either younger generation. And then the other, sort of social imperative that is coming out very clearly is how do you take the mortgages and the home buying to the low to moderate and minorities. And in fact, there's a recent study from TransUnion that 60% of the credit active customers are in the LMI segment. So with that as the sort of underlying metrics that we are looking at for the next coming few years, I want to kick off the discussions with you, Matt. Matt, you've been with Churchill for over 20 years, an industry veteran, and Churchill has a unique, focus around mortgages and trying to do, the, as you call it, the smart path to home ownership. So why don't you kick off with your thoughts on how do you see the market shaping up, and how are you getting ready from your perspective for that?
Yeah, great. Thank you, Vivek. Those are really interesting stats that you started with. Effectively, the industry is going to be dealing with approximately half of the aggregate volume that it did next year. And we're already starting to see a lot of people with short-term memory. What I mean by that is many companies, salespeople forgot what life was like 2019 and prior, when volumes were normal, when margins were normal. And over the last 2 years, it feels like the industry has conditioned itself to become accustomed to almost manna falling from heaven and by way of loans, with more volumes than most companies could handle, with more commissions than most LOs have ever earned before, and higher margins than most companies have seen in decades. And now that's shifting back to something more normal. And all of the pain points, all of the behaviors are largely predictable when a body goes from something that they've become conditioned to by way of volume, margins, profits, that's extraordinary, to ratcheting it back to something more normal and more difficult. And so it creates some real issues. First of all, margin compression is something that's happening and has been for the last 6 or 8 months fairly significantly. They're still good, but more and more companies are trying to squeeze more and more volume by way of pricing, which is going to put a real benefit to those companies that have figured out how to manage their costs. Unfortunately, when things are really good, companies spend a boatload of money. People spend a boatload of money. And their overhead gets bloated, their expense behaviors get fat and happy, And shifting away from that is a really difficult thing for most people and companies. We've got a saying that things aren't always going to be as good as they are right now. And the corollary is true also. Things aren't always going to be as bad as they are right now, regardless of what season you're in. Business is just a season, and the mortgage business is seeing some huge swings in those seasonal flows of business. So where I think we're heading, I think there are a lot of companies out there that are going to have to make some serious adjustments to their budgets, to their overhead, to be able to manage in a real profitable way going forward without only dropping rate. Because you're going to also have to cut costs of fuel to be able to hold on to the revenue that they're getting and call it profit. Right? We joke all the time, generating revenue isn't how you make a profit. Keeping revenue is how you make a profit. And a lot of companies have, I think, forgotten that. And so we're going to see a big shift in that direction. I think you're going to see a fairly sizable shift in terms of investments in technology, and hopefully over the last couple of years, while people had excess revenue, they were investing in things to help reduce cost and make their operations more efficient, and getting real creative at the same time that they were basically running triage on all of the volume and work that everybody had to do. They had to be running a parallel path, or they're going to find themselves in a difficult situation over the next 12 months while they have to catch up and really make that shift. And, the other thing that I feel like is going to really be a challenge for a lot of companies and the industry at large is the affordability aspect. Your comment earlier, Vivek, about how the demographics have shifted into a more youthful generation. Those folks also haven't had the same amount of time to save up to buy homes. And when you've had such enormous inflation on property values with such a restriction on what properties are available on inventory, and you have a younger demographic trying to get into the market by way of home buyers, it's putting some real pressure on them to not get themselves in a situation where they have to pay more for homes than they responsibly should. One of the things that we like to say is our job is to help families get on the path towards what we call the real American dream of debt-free homeownership. That just speaks to being wise financially as you go through the journey of building wealth through home ownership. And I think it's becoming more and more difficult for the younger generation who haven't had the time to get themselves with a large down payment in a financial place where they can responsibly enter into the market, because values are in price. Home prices have just gone up so much. So call it 18, 24 months.
Thanks, Matt. Very interesting. And I think at a very interesting inflection point in the industry, I would say from a lender's perspective, it's the right time, if not already, to make the right focus around your costs and technology and being disciplined about it. So thanks for that, Matt. Michelle, I'll go to you next. You also have great company culture at Move. You are all proud of making the home buying process quick and easy and creating long-term community impact. So would you like to share from your perspective on how you are looking at these forces shaping up, and how would you be advising people to be prepared about it?
Yeah, I think, we are wrestling with the same challenges that any company out there is wrestling with. And it's not specific to mortgages and financial services. There's a lot happening in the marketplace. There's generational changes. The profile of the borrower is changing. I think a lot of what Matt said, we completely agree with. I think at Movement, our core business is purchase. That's, where we have continued to, that's where the business started, and we continue to grow there. Now, I will say we also want to be able to capitalize on a refi opportunity, as we saw happen in mid-July. And so, we sprinted over the last few months, like a lot of other, companies did, to try to recapture business, maybe that is already ours and sits in our servicing book, but then also business that is out in the marketplace who we believe we can serve those borrowers well and better. And so, I think the challenge for any business is, how do you run your business today but prepare for the future? And so you want to be able to fortify the castle, while things are going well. And so for the last several years, we have made continuous investments in our infrastructure, in our technology, in our operations, from an effectiveness perspective, really driven by how do we continue to serve our borrowers well, serve our loan officers well, who we believe is the center of everything that we do, and then serve our realtor partners well. As much as the market is changing and the profile of the borrower is changing, the truth is that these are individuals who have grown up with Amazon. They have grown up with Uber, and those companies have kind of made it really difficult because that expectation, that experience that we all have with Amazon and Uber, people are bringing that with them into the home buying experience, and they're expecting that type of experience. The caveat really is they don't want to do it without human beings. We've spent a lot of time researching and connecting with our primary customer, which is our realtor partner. And they continue to play a significant role in that transaction and shepherding borrowers into their first home purchase. And first-time home buyers is a big portion of what we do. And how do we help navigate that well for them? This is a generation in many cases who saw their parents lose almost everything in the financial crisis of 2008. And so now these people, these individuals have gotten married, or they're single, they're having children, and they've aged into wanting to buy homes, and they don't have amnesia. They remember, right, what happened and what their families went through in 2008. And so I think for us, it's very important to intimately understand what it is that they want, and then continue to fulfill those needs through our loan officers and realtors. And in the last couple of years, we've made those investments. We believe that we're really poised for success in the future.
Thanks, Michelle. No, definitely great to see how your purchase-focused mission in the company has really helped you navigate this and will help you navigate in the future. And definitely the demographic shift, the first-time home buyer focus is a good takeaways. So with that, let me move on to you, Tracy. So Tracy, you at a very interesting intersection of business and technology at PennyMac Loan Services. So especially, you're a large and growing independent mortgage bank. So how would you see that both from a channels perspective across various, consumer as well as channels?
Yep. Thanks, Vivek. So PennyMac serves all mortgage production channels, so consumer, broker direct, non-Del, correspondent lending. And my role really in the organization is ensuring that our strategy and technology align to serve those channels. I'm going to focus my response to the market more around our third-party channels, so our broker, non-Del, and correspondent channels. I think Matt and team said it well. Like we do need to remember and put things in perspective that yes, the market projections are going to be much lower, but it wasn't many years ago. It was only a couple of years ago that this is really the range of the market size that we'd be, operating as normal. And so it's really how do you adjust? We have the basics of making sure that we have the relationships in place with our third party originators. That starts with our awesome team here, as well as our leaders. We have Kim Nichols, who's in charge of our broker and non-Del team, and Abby Tidmore in charge of our sales team on the correspondent lending side. And they pound and grind the relationship as having that baseline. You need to have that as your footing as you go into markets that are either down or up, honestly. And so we think that obviously will serve us well as we navigate into 2022 and beyond. The main thing that our clients are looking for from a third-party standpoint is ensuring that they have easy way to transact with us, transparency in the process, and tools to help their consumers, similar to what the panelists just mentioned. And so that investment in technology and investment in those items to help them grow their business is very important. And then lastly, around our back office, it's what we've been doing. It's in our DNA and our culture of always evaluating methods that we can improve our service, improve our efficiency, efficiency to ultimately ensure that our customers get what they need as well. So with that, I say the same thing that Matt said earlier, which is, we need to put things in perspective related to the market. I will say that our broker channel specifically also are typically very poised for the purchase market. They really typically out-index other channels around purchase business, and that's because they have such deep ties in their communities, whether it's with the realtors and the local communities and borrowers who, yes, they need the technology to do it, to handle at 9 o'clock at night when the kids are in bed, but they also want that trusted advisor to help them through the process. And so our job is really to ensure that we're enabling them to do what they need to do as that trusted advisor for the borrower.
Thanks, Tracy. No, I think that's a very important point, and we are seeing the shift in the market a lot towards wholesale broker channels. So, those are interesting aspects on how there are so many channels that you can leverage and benefit. And your point on relationships is a great one on how. So, with that, Brian, I'll to you next. You represent the fintech industry here. FinLocker has a very interesting, innovative concept of bringing in financial fitness and home ownership. So how do you see, from your perspective as a fintech, the industry shaping up from an overall trend perspective?
Yeah, thanks for having me. Great question. And I'll start by level setting. I came from the primary mortgage origination space. I spent 28 years there, came to FinLocker a little over a place where I don't miss the originations business and margin compression, but I can tell you the 2 years prior, I'd missed a lot of the fun activity that was going on with high margins and high volume. So, but it's been interesting from my seat to interact with different companies of all sizes in different channels. And from my perspective, regardless of the company size, regardless of the channel of origination, we're all facing the same headwinds in terms of where the market's going. And it's not even where it's going. It's already gone there. I think Matt already referenced that. If you're out there and you're waiting for this shift to happen, you already missed it because it happened already. And it's just about to get really dramatic for us as we kind of exit 2021. What I'm encouraged by is from an industry perspective, and Vivek, you started out by kind of framing the question around first-time home buyers and social imperatives. And there is a focus across the industry, across channels, on better serving all consumers. And in particular, in that first-time home buyer segment, there are people leaning in heavily on providing more better understanding earlier in a consumer's journey. And so that to me is really encouraging. I think while technology is important for all the things we've addressed so far, you can't replace the relationship at the local level, especially with an originator, again, regardless of channel. And I think the folks that are going to be successful, really successful on the other side of this, are those that can figure out how to use the right set of technology and still maintain that high touch relationship focused experience for consumers. Because you're right, it's super easy for all of us just to go on here and order something from Amazon. On Sunday, I ordered something Sunday morning and it showed up at 4 p.m. Sunday. It was mind boggling. But I don't see people doing that all the way through buying a home and getting financing. I think there's a lot of things you can do with your smartphone, your little mini computer, but you still want to interact with somebody at the end of the day to kind of get over the finish line. So I think, where I sit, it's really bringing together the strong relationship focus that many successful originators have built their businesses on.
Thanks, Brian. It's really interesting. I was making notes. One common theme that I have heard so far, and as technologists, we tend to think we can solve all problems with technology, but human relationships is something coming out very clearly as a very important theme, and you touched upon that very well. So thanks, Brian, for that. So Jay, let's go to you next. You are also as the industry head. You see things across verticals, and I'm sure you see a lot of intersection of mortgages with capital markets, cards and payments, and other industries. So, could you share your perspectives on how you see trends from other verticals coming into this, industry?
Sure, Vivek. Thanks for the question. My observation on a lighter note is the last time I saw intersection between capital markets and mortgage with the mortgage-based securities, and we precipitated the Great Recession. So there are some learnings from that. So we need to be a little careful on that. But I think there are great examples and cross pollination of ideas that we can take from other sub verticals in financial services. Matt referred to the tightening of profit margins, which is expected right now. I see that large banks and asset managers, especially on their operations side, one secular trend which we saw was digitization. So with digitization, I saw them able to improve efficiencies on their back office processes. They were able to keep costs down with the same set of resources. They were able to offer more products. So I think digitization is a huge trend that I see that will gain a lot of momentum in the coming weeks and months, and that will come to the forefront as mortgage bankers try to manage their profits. So I think that is a big trend that I see. The second trend, which I see, is also the democratization of finance. Michelle talked about expectations which consumers have with their applications, be it the Ubers, the Amazons. But one thing, I completely agree with that. And as there's democratization of finance, by that I mean that the home buyers are now getting much younger. Their expectations are different. They would expect that, and they would go towards mobile first as a first option towards purchasing things. I saw the National Associate of Realtors, the report which Vivek you shared with us. In that about the Gen Z and the Alpha, the age group is just having about 2% home buyers right now come from that segment. But that segment, 88% of them use the mobile applications to make their first inroad into purchase. Now, how do you service that is something which I've seen the payment industry, progress very well on that. A big trend in the payment industry is this buy now, pay later, and I feel the mortgage industry has been the original buy now, pay later. So I think there is a lot of things which we can learn from the payment industry. um, they use different scoring models which are not necessarily based on FICO score. I know the mortgage industry uses that. They use a mix of social feeds which allow that. I think that would come into the mortgage industry. I think that's the second trend. So the first one is digitization. The second one is the democratization. The third one, which I see is going to have a big impact, is the ESG impact. We saw what Rocket Mortgage getting into the solar industry. With a lot of homes now here in the US being bought by asset managers, and they having this aggressive ESG agenda, which again comes to digitization. So we'll see a pickup in that, and the finance available, industry is specialists say about $40 trillion will flow into the ESG market. How does the mortgage sector, play a role into that? I see that as a trend coming on in paperless transactions, fast home photos. Some of those trends are picking up. Brian, you mentioned people using the mobile phone. There's a UK company, I think it's Tussle, which has now promised a closure in 5 days' time. So, there are sectors across the world, which is activities through digitization. So I think there's a lot of interesting activities, this cross pollination between subsectors that we observe because we play in each of these, and it's our role to bring to the mortgage industry. So I think that is what I see from my viewpoint, Vivek.
Thanks. Thanks, Jay. So very interesting, and absolutely, we have seen how trends in one vertical comes to the other, and of course, there's nobody needs to be given examples of Uber and Teslas of the world. So I believe we are going to see a lot of interesting innovation coming in the mortgage industry in the future. So let me then, shift to a bit more technology-focused discussion. And let me share some stats again on technology. So, there was a study done by Infosys. We did a study, and we found that 80% of our clients plan to spend double their IT spend on technology, including mortgage lenders. And then if you look at specifically from the mortgage industry, ICE Mortgage Technologies survey indicated that the digital solutions, the way to get loans through the digital portal, went up from 50% to 58%, and we expect that to continue, as you talked about the demographic and the trend of people expecting digital first. Similarly, the sort of the application that were completely completed online, or 80% of the applications being completed online, has now jumped to almost 38% in the industry, which is still low if you ask me, right? So I think those are the trends that shows that uh, you know um, as as we all discussed, the future has started to arrive, but there's a long way to go. So with that, I think we see three trends from info point where our clients are focused on. One is make the front office completely digital. The second is really bring in a lot of automation using AI and robotics on the mid and back office. And third, these new interesting business models that are coming up. Jay, you mentioned Rocket getting into solar, and there's a lot of activity around fintech. So it'll be interesting how sort of these adjacent markets come together and how people look at technology to do that. So with that, I'll shift to questions around technology. So again, I'll follow the same order. So Matt, you want to share your perspective on what you see as the big technology drivers from your perspective, and how that will really drive some of the incoming challenges and opportunities in the housing and home buying space.
Yeah, that's a really interesting question. I think technology can go in so many different directions, right? There's so many parties out there, players that are developing technologies for finance, for mortgage specifically, enablers that a lot of companies can buy off the shelf, and if they're smart enough and have a good strategy, can plug right in and make that work. You can invest a boatload of your own capital into developing your own technologies to try to create a differentiating advantage, which I think is more and more difficult these days with all of the various players that are putting technology out there. So you have to be careful, but you have to invest in it. The way that I look at it is we have to compete at the cross section of convenience and relationship. I think as especially the younger generation, they actually do want education. They do have an expectation of completing their transactions digitally, but I feel like they also have a real hunger for knowledge and making sure they do it right. And so if you're going to survive in the mortgage space, or any business for that matter, you have to be in a position that you can give education and equip people to make great decisions for themselves. And when they make a decision, you have to be able to execute yesterday. It's amazing to me that while Vivek was talking earlier, I could pick up my phone, find a car online, order it, pay for it, and have it delivered probably Sunday by 4 o'clock, Brian, like you did. And that's an asset worth $50,000 to $100,000 that I can immediately drive over to Mexico or Canada when the borders were open and run away, and everything is great. But yet, a $200,000, $300,000 home that's on a fixed structure still takes us so long to get done, and we have to eliminate all of the wasted time in the process. So I think your technology investments have to position you to be able to close loans as fast as regulations will allow us to, period. And while a couple of years ago that sounded sexy, yeah, I'm going to be able to close loans in 5 days. Well, you know what? Everybody is going to be able to do that if they can't do it already, period. That's kind of table stakes, in my opinion. You have to be able to couple that with education, with helping people make great decisions and helping them win with money over time. Right, Jay, you mentioned the FICO score. right? That's not a credit score. That's a debt score. That tells people how much debt they've been able to bring into their life and manage. It doesn't necessarily measure somebody's financial abilities to properly manage their financial lifestyle and pay back a mortgage. And so I agree with you, Jay. That side of the market and the industry, I think, will evolve to much more applicable scores that don't just measure somebody's ability to bring debt into their life and make payments, but other types of measurements. Brian, I love what your company at FinLocker is doing in terms of helping people understand their readiness, right? It's a great strategy to help new people into the market know, based on the set of rules that the industry has today, when they're ready to buy a home. And so much revolves around that. But technology, Vivek, a lot of companies I've seen waste a ton of money on technology because they think they're building something whiz bang special new that is just going to get replicated over the short term by somebody else, and you'll be able to buy it on a per loan basis to help kind of keep your fixed costs down. So I think the big challenge for everybody is identifying what technologies to invest in, who to invest in those technologies with, and how they're going to deploy that to make them different.
Thanks, Matt. Really good. You hit the nail on the head, and I think one takeaway, the marriage of convenience and relationship. That's a great way to put it, as how technology needs to help. And yes, lots of things to look at from a wise investments. Invest wisely. Point on education. Great points. So, Michelle, you have been very successful in launching the Move Home platform, and definitely it's a big focus for movement. But could you just share from your perspective the broader focus on how you're looking at technology, current and in future from your perspective?
Yeah, absolutely. I think, there are two sort of pieces at play all the time, which is one is the fintech space right now. And somebody mentioned this already, is very, very hot, noisy, cloudy, like fill in the blank, right? And every startup, every company has, a very distinctive flavor of something that is a part of this larger process. On one hand, that's exciting. On the other hand, it's really challenging because when you're a lender, right, you are responsible from beginning to end, from lead to post-closing. And, if you really were to pick and choose, you probably could have 150 different fintech technologies and 150 different partners all playing one little piece and part in this larger ecosystem. I think, the second item is the larger ecosystem, is that there is also a challenge for companies to how do you continue to advance and evolve without getting in front of the broader ecosystem with which you are dependent upon, whether it's government agencies, whether it's, legacy technologies. And so you can't get too far ahead because you then become disconnected from the ecosystem that you need to rely on in order to bring these, borrowers from lead to close. And so, and then into the secondary market. And so, as you think about all of those things, you can be confused. You can get very confused. And, we always say, hey, what problem are we trying to solve? And for who are we trying to solve that? And you've got to get very, very specific in answering that question. It can't be a broad answer. And so, for us, like any other company, it continues to be, how do you bring value to a loan officer, to a realtor, to a borrower, in the way that they want to receive that, when they want to receive it, and how they want to receive it. And so whether that's an investment in technology, whether that's, the intersection of content and technology, which Brian was sort of referring to earlier, I think all of those things play a role in enabling really the important players at the table, which is, again, the loan officer, the realtor, and the borrowers. How do you equip people with that value without it feeling like a disjointed process, without having 150 fintech partners, without having to invest an astronomical amount of capital to build something that with leapfrog technology will be out of date in 60 days from now. And so as you think about wrestling with all of those things, I think every company has got a question to answer, which is, what problem are we really trying to solve for, and then begin from there.
Thanks, Michelle. No, I think that's a very valid point. In the mortgage industry, the ecosystem word that you use. That's really the key thing, right? You have CRM, POS, LOS, servicing platforms, and a plethora of other, and rightly so. There's a big process and big industry involved across areas. So how do we stitch it together and like you said, look at what you're trying to do, and get your company's focus clear, and then leverage the right partners across the system. So great nuggets, and I think the focus around having that ability to ensure that you have the end-to-end story laid down is a key takeaway that I just put down. So Tracy, let's move over to you. You've been instrumental in building technology platforms across channels at PennyMac, and you talked a lot and you focused a lot around the third-party originations. So how do you see that playing out in the future from a technology perspective? And if you could share some thoughts on that.
Yeah, sure. I think at the end of the day, technology investment is going to be as important as it is now, as it will be, as the market starts to change. I think similar to what Michelle mentioned earlier, it's really about where do you invest, right? And so from my perspective and how we evaluate things at PennyMac, I mean, there's not a sitting home run there that, if you plug in this, you have everything covered. And it's similar to, again, Michelle's comment around, there's so many different components of the ecosystem that needs to be covered. But we try to take the approach of, again, understanding, the partner that you would be connecting with, whether it's fintech or others, evaluating truly what business metric we're trying to change, right? So, and that comes from, number one, making sure you really truly understand, your current, challenges and areas where improvement in, efficiencies or timelines or a service that we can extend out to either brokers or correspondents, even our consumers. So understanding what that is and not be afraid to actually do some test and learns, because again, you can't sign up with 500 different groups. But sometimes in order to really understand, is this going to move the needle in a way that we want? It may take, kind of initial investment to do that test and learn type activity to see whether or not you're going to, reap the benefits that you're expecting, and then, expose that to your greater platform and organization and customers. So that is one approach. I think that with the market changing, the demographics changing, there are going to be some baseline things that if you don't have, you're going to be left to left on the side. The digital application is not just for young people. I mean, everyone is using, Amazon, and being able to take an application online is just a basic, even if, we don't have high percentages there yet. I think also on the closing side, when we look at the market and being able to, again, view documents and close, signatures, e-signatures and notaries, et cetera, online is going to be very important. But, what happens in between there, front and back, really requires discipline, evaluation of partnerships that you would go into, staying true to, the front end objectives and measurements to be able to then forge ahead. And I like exactly what Michelle said too. And it's at the end of the day, when you step back, how does it now complement your ecosystem and work that you're doing already, and complement your business and your business partners? Has to be, you got to look yourself in the mirror and go, is this cool, or does this truly, provide that, that improvement that you're looking for? And so that's how we look at it on the PennyMac side.
Thanks, Tracy. I think I see another comment thread that you've been also wise on how you look at your technology focus, and what's the end impact from a business perspective, right?
Exactly.
Both on retail as well as third-party originations. All right, so Brian, I'll come to you next. We talked about how fintechs have a purpose across the board. So from your perspective, where do you see, especially in the space that you are, a little bit top of the funnel, nurturing of borrowers? So if you want to share some insights on that.
Yeah, I'll start again, I always think about things from the perspective of where I sat, prior to coming to FinLocker as a lender. So suffer from shiny object syndrome in a big way. Everyone wants the new toy, and I think from where I sat in my past life at Flagstar, we were very disciplined and diligent around how we looked at new technology and made sure that it was just solving a problem. So I love that comment from both Michelle and Tracy around identify what the problem is you're trying to solve, and then evaluate the options to solve it. But then more importantly, or as important, how does that piece of technology or solution fit in your overall customer experience? Because you could have the best whiz bang solution to solve this one problem, but if it at the end of the day, you're not really helping your consumer or yourself. So I think when I'm talking with lenders today, I do try to have the perspective of where I was at, and I always ask, are we replacing something? If so, why? What didn't work for you there? Because I don't want to be another problem for you. But then more importantly, what's on either side of, how do we work together to have a seamless consumer experience, and the lender experience has to be, can't add work to the lender itself. So, I think these are the times when there's probably a little less shiny object syndrome, because the budgets are going to start tightening up with all the things we already talked about. But I do believe that it's even more important to really evaluate along the context of solving a problem, and then where does that fit in the overall consumer experience? Up the funnel, and luckily for us, there's not a lot of competition that's doing exactly what we do, but we do have to address, CRMs and different tools off of CRM. And so it's fascinating to understand how different lenders in the same business put technology together in a different way. And at the end of the day, they're still producing the same 30-year fixed rate mortgage that's getting through the manufacturing process. And I apologize. I think my computer is freezing up here. This is what you get when you're at a tech company that sits on top of a lot of very important private data for consumers. We have this crazy Netscope platform that doesn't like all websites, and it's not liking AirMeet today. Sorry about that.
No worries. Thanks, Dan. But the good thing is it was a few microseconds, so we didn't miss a lot. But thanks for sharing your insights, and it's very interesting on how you at it. From your perspective, you have a unique role to play, but I think the common theme is make the focus and the technology investments on what makes best sense from the business outcome perspective. So thanks for sharing that. So Jay, move on to you. In your role, you have visibility across the industry, across various mortgage companies. Where do you see the trends on technology that is coming in the future?
Well, Vivek, in the future, there are three broad things which I see, and some of them are cliched, but I think they are getting, commonplace right now. The first one I can think of is AI-based automation. A couple of years back, it was mostly robotic process automation. We had, manual tasks which were getting automated and repeated. Now that's mainstream. Now applicability of AI on those is we are seeing a lot of acceptance on that across client base. The large banks have it, but it's going and the fintechs are accelerating that. They are bringing this unique proposition on their scoring models and AI models. So we see that gaining acceptance around the world across mortgage bankers. The second thing, which is both a cost play as well as an efficiency play, as well as a increased scope of business development, comes from the hyperscalers, be it AWS, Google Cloud, Azure. They have unleashed the cloud movement, and through that they're making serious investments in providing technologies at scale to a lot of bankers, and which I see like for instance, it could be improving the quality of loans, CRM systems. All of those insights are getting at scale now being provided, and these companies are making good investments in creating domain-based solutions. I remember just a couple of minutes back, all the speakers were talking about the plethora of fintechs which are coming, especially in the underwriting space. We see a lot of that coming, automated underwriting, robotic based underwriting. I think we have almost about 30 to 40 such fintechs we have seen. Have our own product as well. I think that is an increasing trend as companies are trying to draw out efficiencies in their actual models. This is across the spectrum. We are seeing again a cross pollination between different sectors there. But I think that is an area in which I think there is a lot of work which is happening. The third trend which I see coming about, there was a promise many years back, was blockchain. But I think in the next couple of years, especially as we have started doing on pilot projects across banks, across geographies around the world, I think that that will become mainstream. Especially on the securitization of assets between mortgage bankers and capital markets, that chain of command. I think the blockchain would come up. This industry is also, things like, so many intermediaries are there, from title insurance companies to appraisal companies. I think in that blockchain is expected to play a big role. It was talked about a couple of years back, but I think it will get mainstream in the next in the 12 to 24-month period itself. You'll see a lot of applications coming in that area. And I think those are some of the three big trends that I see applicable to our industry.
Thanks, Jay. Thanks for that. No, absolutely. That the AI-based automation, the cloud adoption definitely are already here, and a lot of activity. I'm sure we'll see some consolidation in the future, but there's a lot of activity around, especially using the AI to extract information out of documents. And blockchain is interesting, as you mentioned. It's it's actually one of the questions in the Q&A, right? What do you see the future of blockchain? So you've partially answered that already. So thanks for that. I think we have just 10 minutes left, so let me take some audience questions. So the first one is, I think it's for you, Michelle. It says 60% leaders said the pandemic made organizations embrace digital transformation sooner. Movement has done it, launching Move Home, its sales and marketing platform, and onboarded more than 2,000 loan officers. So do you want to share some? The question is, would you share your perspective on how that's going? And any takeaways from that?
Yeah, I mean, I think for us, it was an opportunity to invest in how a loan officer works, whether it's individually and with their team. Maybe over 2 years ago, we really did a good bit of research in getting inside the mind of loan officers. And one of the themes that continued to bubble up, regardless of how big of a producer they were or how long they've been in the industry, or whether they had a big team or a small team, was something we actually talked about earlier, which was, there's all of these tools that I have to use, and none of them communicate with one another. And so I have my pipeline over here. I have my LOS over here. I've got my sales or my contacts and leads over here. I've got my marketing over here, and this is how I manage my communications. And there was loud and clear Some of them were super creative and had found a way to duct tape things together in a way that worked for them. But it was really expensive. You know, they're paying for a lot of these things out of their pocket, and it's not integrated to the, you know, enterprise infrastructure. And so, you know, for us, we walked away from that meeting. It was over 2 years ago, and we said, okay, that's the problem we need to solve. You know, how to, at least for what's within our control here inside of the company, how do we create a platform that does connect all of these things together? If their leads, their loans, their pipeline management, their marketing, their contact management, you know, their post-closing marketing, their communications from text to phone to email. How do we connect those pieces together and have that piece connected to the infrastructure of the organization? And so that's what we did. You know, we built the Move Home platform, which was really built on the shoulders of our loan officers. I mean, they helped us develop the roadmap. They were piloting, they were testing, they were involved to a level many of them had never been in building technology, but it was built for them to use, you know, and so they needed to be part of that development team. And so, you know, we, over the summer, we've, you know, got over 2,000 people on the platform using it. We drive adoption, you know, through, I say, formal change management programs, informal about the way we like to roll at Movement Mortgage. And so we do it in our own edgy way and style. And we continue to iterate on that platform based on the needs that they have. Certainly every single day, everybody wants everything. I think Brian said the shiny object syndrome. And so that's certainly there. I don't expect that to ever go away, but it goes back to how do you strike a balance between what you know the enterprise needs, what you know the loan officer needs, and how, you know, will it be a feature and function that's, you know, truly adopted that drives value to them, which for them is productivity, right? So that's been our experience. It's been exciting.
Thanks. No, thanks, Michelle. That's and having 2,000 as loan officers on a platform in just a short span of time is a great achievement. So kudos to you and your team. The next question is, I think it's generic, so I'll probably just throw it out there and let you respond. I'll read the question. Most of the panelists mentioned the importance of partnership ecosystem. Where all do you see fintechs contributing the most and be the key partners? So, you know, whoever wants to go first.
Yeah, I'll start, and I will answer it. I think it's not just fintech, but any vendor or service that provides, you know, kind of key integrations to your ecosystem, whether it's to help with your fulfillment processes or help with services to your customers, to your sales teams. You have to have that, you know, partnership in play. But I go back to my earlier response around ensuring that you're connecting with the right, you know, the right groups, right? And in the right solutions. Even the solutions can be great, but it may not fit, you know, again, what's needed for your organization and to solve the problems that you're looking for. So to me, the relationship piece is really and partnership is important with any of our vendors like Infosys and others who do a great job for us. And if you don't have that, it just, you know, obviously it crumbles across the board. So.
Going back to the theme of again, so thanks, Tracy. Absolutely, that's a good point. Anyone else who would like to chime in on that? Where do you see fintech?
Yeah, so this is I'd like to opine that, you know, I think fintechs across the value system do have a role to play. I come across you know, some fintechs, especially in the regulatory management space, you know, because it's a heavily regulated industry. I think there is a niche which they play, which can seriously bring down cost and also keep in change with the upcoming regulations very quickly. So RegTech, which is offset of fintechs, actually is going to play a big role. I think that's one segment which we should watch carefully and integrate them into the ecosystem, understanding what role they play, because I think those regulations keep changing, and how do you keep pace with that? I think those partnerships are very valuable.
Thanks, Jay. That's a good point. Mortgage is a heavily regulated industry, so that's a good aspect. Anybody else have any?
I was just going to add from the fintech perspective, and when I think of partnership, I also think about, strategic integration. And so from where we sit, we can't just go integrate with everybody out there. It would be pretty obvious which of the bigger platforms would make a lot of sense. And so we're very purposeful and intentional around how we think about integrations, and we work with our clients to make sure we're integrating with the right platforms, but in the right places, and moving the right set of data at the right times based on those integrations. So I think that speaks to kind of collaboration, kind of at the table to really flush out what's the right way to connect technology and then create partnerships that actually add benefit for the lender.
Mm-hmm.
Thanks, Brian. Good point. And I can see that. I think the few players in the industry sort of have started to have more integrations. So yeah, being very selective on that is a trend that we see coming up. Any other perspectives? If not, I think we are just 4 minutes away, so I'll probably leave the floor open for any closing comments and remarks. I think there was one more question on blockchain, but I believe, Jay, you answered that. I think the floor is open. Any closing thoughts from anyone?
No, it's been a very exciting discussion from my perspective. It's always a pleasure to listen to Matt, Michelle, Tracy, and Brian. So I gained a lot. So and it's an exciting industry. This industry is the cornerstone of the economy. A lot of innovation would get driven in this space. And as Matt, you mentioned, $50,000 loan, which is sizable, gets done and delivered so fast. And I think there is ample opportunities where technology can make a difference, and you're all at the leading edge of that. And we look forward to collaborating with you and working with you on this journey. So thank you for the time, and Vivek, thanks for the insightful questions as well.
Thank you, Jay and Vivek. Enjoyed it.
Thank you, everyone. Bye.
Thank you.
Bye.
Bye-bye. Thank you so much. Bye.